Good morning and welcome to Wellington's 2014 third quarter result conference call. I must start with the usual warning. We'll be making forward-looking statements on the call today, and as these are predictive in nature, they are subject to a number of risks and uncertainties relating to Wellington, its operations, the market in which it competes, and other factors, some of which are beyond the control of Wellington. Actual results and conditions may differ materially from those expressed or implied by such forward-looking statements. You will likely have seen the third quarter results announcement released 10 days ago. I'll make some further comments on the results, and then Greg will comment on the outlook for the remainder of 2014 and plans for next year. We would welcome questions after the formal comments. Greg and I can, of course, be reached after the call for any additional questions you might have. Quarter 3 is traditionally the lowest revenue quarter due to Northern Hemisphere summer holidays. Revenue in the quarter was $3.8 million, which was down compared to $4.7 million in the same period in 2013. Latin American demand remained well down as expected. The key features of the result are 707,000 refrigeration motors were sold in the first 3 quarters of the year, compared with 857 for the same period in 2013. We sold more of our higher-priced variable speed ECR01 motors and few of the lower spec and lower priced ECR8292 motors. US dollar revenue was $12,076,000, down from $15.742 last year, a $3.7 million US dollar reduction. By market, Latin American revenue was down 4.9. The rest of the world was up 1.2. Motor sales to our biggest customer group in Latin America were down 3.6. Gross margin for the quarter was 18.9% and is 18% for the first 9 months. This is much lower than current supplier pricing will give us, caused by delays in selling down inventory built during the period that we were introducing new electronics and motor suppliers. East West, our new Vietnamese motor manufacturer, will reach its price target in the first half of 2015 when it has supplied its 300,000th motor. Our expectation of margin when inventory is sold down and supplier pricing is flowing through to results is around 25%. Operating costs were much lower at $5.6 million for the 9 months compared to $6.4 for the 3 quarters last year. The earnings before interest, tax, depreciation, amortization, EBITDA result was impacted favourably by the movement in the New Zealand US dollar cross rate. Because Wellington maintains its books in US dollars, the fall in the New Zealand dollar US dollar cross rate meant very substantial FX gains were recognised in respect of the New Zealand dollar denominated preference share debt. Of course, this is not a cash benefit. The EBITDA loss was $509 versus $840 for the same quarter in 2013. FX revaluation gains in the quarter amounted to $524,000. Cash at 30 September was $3 million. Inventory was $5.2 million at 30 September. Levels were planned higher to reduce risk from the supplier changes we've made, but it is taking longer than we envisaged to restore normal levels due to revenue weakness. At this point, I'll hand the call over to Greg to talk about our current status and plans for 2015.
Thanks, Howard. Hi to everyone, and I hope you're all getting ready for the Christmas break. As you know, and as Howard has talked about, I'm going to first start by talking about how this year's going to end, and then I'll look forward to 2015. So as Howard's already mentioned, we've been seeing lower demand from our Latin American customers, and that continues to negatively impact revenues and profits this year. That said, we're really pleased with the way Europe and Asia are tracking, and both of those regions are ahead of 2013 and showing significant growth. So Europe and Asia are up. Latin America is substantially down. I'm actually quite bullish on Asia right now, as we are seeing plenty of new customer interest ramp up there. We're also winning in Europe, but at a slower rate than Asia. And of course, future growth in Europe depends on our new ECR Whisper supermarket motor, which comes out in the second half of 2015. The economic situation in Europe is still pretty fragile, so we are cautious about what happens in Europe next year. With the continued pressure in Latin America, and to ensure we manage towards the lowest cost base possible in 2015, and in light of the revenue situation this year, we are making adjustments to our cost base, both in operating costs and cost of goods sold. We are restructuring some roles in the organization. That's already started, and we're looking for ways to become more cost effective. The changes we are making are targeted to reduce our break-even point even further. That break-even point was around $43 million in 2013, and we expect next year our break-even revenue point to be below $25 million. As a consequence, in 2015, we expect a much reduced loss, with a break-even result possible dependent on sales performance. On our new product launches, things are happening very quickly and they're going quite well. We are launching our new cloud-based fleet management solution called SCS Connect and our highly efficient, super quiet ECR Whisper supermarket motor. Both of these products have achieved technical and cost targets, and the responses we are getting from the market to test samples have been incredible. We are particularly seeing considerable interest in our fleet management device, the SCS Connect, from large soft drink bottlers and breweries. We have a number of field trials, 4 or 5 field trials happening right now in Mexico and also in Asia. We've actually got demand for further field trials, but we cannot satisfy them all because we are constrained by resource availability. We just can't keep up with the demand for trials for our new SCS Connect device. So that's good. The new products will realize our strategy to move beyond the simple motor that we grew up with and will establish Wellington as a leading supplier of both connected refrigeration control solutions as part of our new strategy and supermarket EC motors. Looking ahead to next year again, we're not going to forecast a large bounce back in Latin America business and are only expecting a modest level of revenue growth as our new regional channel partners come online. We see growth with our supermarket display case customers from our new motor, and we commence revenue generation from our new products in the second half of 2015. I've actually spent quite a bit of time on the road over the last few months visiting customers all over the world, selling our new products and talking about our new cloud-based system in particular. They've told me we've developed solutions that they need and they are not available elsewhere from other suppliers. Given our smaller size and our progress towards profitability, it is tough for us to meet all the needs of the market. So we are focusing on just a few field trials, as I said, and just a few customer opportunities globally. Clearly, we can't afford to do all that we want to do, but our products, our new products in particular, are opening up new possibilities for strategic partnerships. In 2015, you may well see us opening new channel and new technology partnerships to increase our capability and grow our revenue faster. So that's it from me. Back to the operator to see if we have any questions.
Thank you. We'll now begin the question and answer session. If you wish to ask a question, please press the star key followed by the number 1 on your telephone keypad and wait for your name to be announced. We'll pause a moment to assemble a queue. Once again, to queue for a question, please press star 1. Your first question comes from the line of Kevin Bennett from Harbour Asset Management. Your line is open. Please go ahead.
Greg, what you're describing sounds fine, but what about the cash burn? I mean, how sustainable is trying to meet these trials, etc., with $3 million in the bank?
Cash burn's been impacted this year, obviously, by the revenue situation in Latin America, but, we're taking some cost out, Kevin. We've actually started some restructuring already. I think that we'll take a first chunk out now. That'll probably run into Q1 by the time we have some, notice periods and that work out. And we'll see how we go next year. As I said, we're only focusing on a few field trials. I'd like to do more, but if we just don't have have the resources or the cash to do everything we need to do, and that's fine. I think what I'd rather do is win and convert, one or two or three of those trials into revenue at some stage next year, and then chase those up. If we get some really, really big orders from like a Pepsi or something like that in second half of next year, I guess we'll have to revisit. I wouldn't want to turn away real business like that, but I feel like we can constrain the field trials, and get a couple of wins in the bag, so to speak, on these new products, and then figure out, whether and how we needed to fund them if they turn into, really big opportunities in the second half of next year. But right now it's okay. I'll take cost out as much as we need to, Kevin, to be able to manage through the current situation and take a look when we actually start getting orders for these products.
Thanks.
Does that make sense?
Yep. Thank you very much.
Once again, to queue for a question, please press star 1 on your telephone keypad. There appears to be no questions at this time.
Okay. If anyone wants to reach me, I'm actually in Canada this week doing Christmas shopping for my kids. So I'll give you my cell number here in Canada. It's +1 778 238 6494. So if anyone on the line wants to reach me personally, that's you're welcome. And Howard, of course, is in New Zealand. Howard, you want to just give the team your number in case anyone needs to get you, anyone on the call?
Sure. My mobile is 027 5870 455.
So if anyone wants to reach us, feel free. Thanks for listening. Obviously, we're closing out the year. Actually, we're seeing some good strength in terms of some last-minute orders from Mexico. It's not going to change the situation of the year, but it's, maybe just seeing some early signs of life coming back from Mexico. That would be good. Like I said in the call, we're not forecasting a massive turnaround in that region, but just some little signs that maybe things might get better next year. So we're hoping that comes true. And obviously we're all focused on our new products and getting those out to market, and continuing the strong interest in those products is going to be really important to next year. So we'll keep you all updated as to how those new product launches go. And of course, whether those markets that we've had an issue with next year, namely Latin America, starts to see a little bit of bounce back, we'll keep the team updated on that as well. So thanks for listening today. Have a very Merry Christmas, everyone, and we'll talk to you in the new year.
That does conclude our conference for today. Thank you for participating. You may all disconnect.